The range of forecasts of economic growth in South Africa in 2019 remain conservative, including from the South African Reserve Bank. The World Bank recently reduced its growth forecast for South Africa this year from 1.8% to 1.3%, and the MPC's expectation is of 1.7% GDP growth in 2019 with downside risks. The MPC has rightly expressed its concern about weak fixed capital formation inhibiting future growth potential. To discuss this, we are joined by Lentsoane, who is the Managing Director of Lehumo Investments. Maudi, thank you very much for coming. Firstly, how would you gauge the South African economic environment in the build-up to the announcement by the MPC?
Look, the South African economy is very bad. There's a very good chance that we've actually registered a negative growth in the first quarter. If you look at all the indicators that we've had some poor numbers coming through, the manufacturing numbers that we had, the mining numbers that we've had, the retail sales numbers, all those numbers that we've had being announced, released by Stats SA, they are pointing to a very bleak picture for the first quarter. So I wouldn't really be a surprise. And I think most economists are expecting a negative number. It's a matter of how worse that number is, Colin. So it's not a great picture heading into this MPC meeting, and I think the MPC has to do something.
Well, at the back of the mind of South African consumer is the current electricity prices, the imminent petrol price hikes given the international oil prices. So the challenges that the South African consumer could be facing at the moment, what kind of preparation and anticipation should they have, even if the interest rates don't get increased?
Look, the interest rates won't, I think, be increased. I think one of the big debate, which the Reserve Bank is avoiding, Colin, is whether they should cut interest rates in this environment. We've got a growth that is not picking up at all. We have negative growth. I mean, I've always said, if you look at how other nations have been able to get involved, to get their economy out of the negatives, the low growth environment. Many countries have used monetary policy, and they've also used fiscal policy. Why are we not embarking on an aggressive monetary policy stimulus? Why should we even be looking at cutting or increasing interest rates, or not just leaving it unchanged, even though the economy is not growing? They're talking about the midpoint of 4.5%. Inflation is where it is at this point, and the larger part of that inflation, it's got nothing to do with credit demand. There's certainly no demand for credit in this country. It's issues that have got nothing to do with South Africans. The price of oil, which has got nothing to do with South Africa, we've got no control over it. Whether you increase the interest rates up to the highest level, you will never be able to deal with that inflation. So therefore, they should focus on stimulating this economy and making sure that we get out of the low growth environment that we find ourselves in.
But when you stimulate the economy and lure investors, the issue of policy uncertainty is rather cumbersome, because at the moment, I remember one analyst was saying that the ANC-led government has been talking about expropriation of land without compensation. But then just towards the elections, just to calm the waters, the statement changed from, "Don't worry, we will not take your land." So do you think with this issue of uncertainty, is the government really blowing hot and cold in terms of trying to calm the waters and charm the investors?
Look, obviously heading into the elections, Colin, it's very difficult to even try and manage what the communication should be. A lot of people say different things because it's election times and they need votes. But I think what the president should do, now that he has a mandate, a clear mandate from the South Africans, even though it's a reduced margins, but he still is able to basically pass on some of those policies. He has to be very clear about policy going forward, make sure that we get rid of those years of uncertainty, constantly living under the dark cloud of miscommunication around policy. We need to be very clear about which policy we're communicating and make sure that we all walk the same path so that we can actually get rid of some of the challenges that we faced in the previous years.
When you look at the reviewed numbers of the forecast of economic growth in the country, what do you make out of the sectors that have been struggling? We're looking at mining, manufacturing, and agriculture, which should really be blowing in all cylinders in as far as the South African economic operating environment is concerned.
Look, agriculture definitely, but I think when you look at mining, we are constantly looking at South Africa, that looks like 30 years ago. I think we need to really accept the fact that we can no longer rely only on the mining sector to really provide, to be the engine of this economy. We've got a very diversified, industries in the country, and I think we need to nurture some of those industries and make sure that we stimulate them and make sure that, in particular, we get the growth from other sectors as opposed to constantly relying on the mining sector, which, we know that Lentsoane is now retrenching some few jobs, shedding some few jobs there. The fact of the matter is we sit with the mining sector, which is in, it's under a lot of pressure. It's a deep level mining, very expensive to get some of those minerals out of the ground. It's no longer economically viable, some of these operations, to continue to support the South African economy. So we've got to support other sectors.
All right. Lentsoane, thank you very much for making time to speak to us.
Thanks for having me.